The Hong Kong market's 0.4% lower.
The job's not done. The inflation numbers are still too robust.
SGXFE is suggesting a gap down. Track the first hour lows and don't be very, very brave is my call today.
I definitely do not want to sell.
The market has opened in the red, down almost 100 points for the Nifty.
The third quarter have been a wonderful and good quarter for us.
I think a lot of legislative changes will be needed to enable different, regulatory data sets and various other data sets already in existence.
Benchmark indices are down close to about 0.25%.
What SBI is arguing is, and it sounds convincing, that this is only part of the way in which the cereals inflation is calculated.
They've announced that they've got 15.7%. I believe in due course there will be a clarity as well. And who are the funds who have already participated and tendered in favor of Minda?
Fitment committee meetings have already taken place and they have not considered the proposal to cut rates or to rationalize rates on cement.
Government is likely to consider giving an extension to M.R. Kumar as the chairperson of Life Insurance Corporation of India.
We've slipped more than 100 points on the Nifty.
Well, you're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. And over the next 60 minutes, my colleagues Rima, Surabhi are here in the studios, and Nigel, of course, joins in from the newsroom floor. Guys, hi, good afternoon. I started the day by saying, thank God it's Friday. I think we can sort of say it again. Anyway, I mean, the market's not having such a good day, is it? It's not been having a good day from the morning, and same as similar kind of picture, although we're off the lows, and that sort of movement from off the lows has happened in the last 15-20 minutes or so. Let's see how far it goes. I'll not get into too much of what is happening, what is up and down. We'll get to that in a bit, but just a few things. The Nifty is just below its 40-day exponential moving average. On a closing basis, it's below the 40-day exponential moving average. We get back above it. I think it'll be a good thing. At the low point, we didn't get to the 20-day, but almost there. The 20-day is at about 17,855. You get a decent close above the 40-day. I think you keep your head above water. That'll be a good thing with the kind of picture the market we have right now. What's driving this is a mix of both global and local cues. I'll get to the global first. Of course, string of strong data. The last was the producer price numbers out of the US. Fed speak, lots of Fed officials are speaking, and all of them are sounding hawkish at the same time. It's pushed up US yields meaningfully, and it's pushed up the dollar as well. Actually, the dollar index has erased all of its 2023 losses. So, it's up and up, the index at about 104 or so. Just to give you an example in terms of how much repricing the market has done already, the peak Fed funds rate now for the July 2023 meeting stands at 5.26%. This was 4.86 just 10 days back. At the end of January, that was 4.86%. So we have seen a substantial 40-50 basis point repricing, market repricing of what the Fed funds rate actually will look like. Locally, third quarter earnings, and I think I've said this enough, have been weak. So if you just want to take a broad measure, if you take NSE 500 companies and you just exclude banking and financial services, ex-BFSI companies, profit after tax, this is NSE 500, so it's the widest basket. That number is down 12% on a year-on-year basis. And of course, that leads to some downgrades for the full year numbers as well. Guys, hi.
Hi, so let me take that cue on the Q3 earnings picture. So UBS has summed up the Q3 earnings on an aggregate basis, and the picture is not looking good. They're saying the BSE 200 earnings were flat ex of financials. EBITDA margins declined by 270 basis points on a year-on-year basis, and this is despite lower raw material costs. The reason is employee costs and SG&A costs are now trending above trend levels, and this is pressuring the margins. So ex-financials, the numbers are not looking good. In fact, they're saying the Nifty EPS has now entered the downward mode again. 28 out of the Nifty 50 companies, that's more than 50%, have seen earnings downgrades for FY24. The index itself has seen a very minor downtick, and that was helped due to upgrades seen in banks. But according to UBS, the upgrades in banks and the current valuations in banks are unlikely to sustain because earnings growth will start moderating according to their estimates and their analyst Vishal, that the loan growth is going to settle in at lower levels and margins will contract. So they're factoring in some earnings downgrades going ahead. They believe, and this is a statement they're making, that earnings downgrades will accelerate post Q4 earnings. So that's the aggregate Q3 picture summed up by UBS, and it's not looking that good.
Well, it's not looking that good on the screen here and now as well, right, Reema and Prashant?
Remember we started TH with Friday. You want to change it to Friday?
No, it's still Friday, so it's okay. I mean, the market is what it is, but yeah, there's a weekend coming up, guys. I mean, let's not take away from that.
Absolutely.
But yes, we do have to get through the next 1 hour, and it promises to be a little challenging, more than a little challenging for the bulls. Look at what's going on the screen right now. It's down and out, completely down and out. Middle of the week, we were all talking about this possibility of a breakout, mid-caps doing well. All of that has reversed on its head in a very significant way today. That's the Nifty. Pull up the advanced decline ratio. Look at what the mid-caps are doing. So it's a very broad-based sell-off that we've had right from the morning. It's been a sort of one-way decline, and that's telling you that it's a decisive move as well. The bank Nifty is down 1.5%, and there is much of the problem. A lot of these frontline banking names, IndusInd, ICICI, HDFC, you name it, they have all been down. And again, the bank Nifty is struggling to sort of make any sort of a up move. At best, it's holding the lows, and that's about it. Apart from that, the IT story has turned in the last couple of sessions. Remember, IT, of course, has been the outlier sector for the market in 2023. We have the Nasdaq fall overnight. The Indian IT stocks are following in step. Even now, that index is making fresh lows. So you don't have support from IT. Banks are sulking. So what do you really have? I mean, even the heavyweights like Reliance are not doing too much today. Very minor gain on Reliance, just about 0.25%. I mean, let me just cap it off with what is then moving on the upside. That is obviously L&T. It's a good day for this one. And Ultratech, with the expansion they're doing, brownfield and greenfield, some positive sentiment around that stock. And then that's about it. It just starts petering off after these 2 or 3 names. So it's a down day. There's simply no other way of putting it. In the broader markets, we'll have much to talk about, including the possibility of a takeover battle. That always gets everybody to sit up and take notice. But more on that in just a bit. Nigel, what are you looking at for the last hour?
Well, first up, we have the DIPAM secretary. There is some, a line that was flashing for you on the screen that NALCO is not on the divestment list as of now. So that's important because there was some speculation that maybe NALCO will be up for divestment. That's clearly, the clarification that's coming in there. That if you're hoping for privatization, that's not happening as of now. That's not one of the stocks. So just keep an eye out on NALCO. Moving to the markets, the 18,000 call, well, that's been getting written. The 17,900 call as well has got written in today's trading session. So a move towards 18,000 odd is going to be met with some selling pressure. That's the positioning as of now. And earlier today, at the start of today's trading session, the call that we made was don't be brave. Don't be brave today. And those bounces are getting sold into. So that seems to be playing out. On the downside, though, the 17,900 put, that continues to get written, and that's giving some bit of hope to the bulls. Because maybe, in fact, the 17,800 odd level is the near-term support. The premium on that particular strike has close to have doubled in today's trading session with the fallout there. So let's see how this one pans out. But as you all said, it's a Friday, another 60 minutes, and we're off to the races.
Okay, exciting 1 hour left. Let's tell our viewers what's lined up on the show then. Minda Corp acquires a 15.7% stake in Pricol, says it's a mere financial investment. But Pricol promoters sense a threat. They say they have the support of institutions. Pricol's future remains the big question on investors' mind. Details coming up on the show.
Cement stocks gain. Dealer checks suggest price hikes may be on the anvil. We'll get you all the details.
And Schaeffler is surging in trade, post a strong Q4 calendar year 22 numbers. We'll get you the complete earnings fine print.
And we also get chatting with our alpha manager of the day, Mogunathan Siva of India Avenue Investment Management, coming up later on the show. All this and more over the next 60 minutes.
Okay, how should you position yourself in this last hour of trade? That's the question. So let's get this to Rahul Mohinder of Viratech.com, who's joining in. Rahul, good to have you with us here on the program. So 17,920 or so is where the Nifty is at. Would you want to take any trades, and which direction? Also, just tell us how you're thinking about the market now, given the price action of the last few days.
Sure. I think, first of all, the entire week, we had a nice little trot up from that 13th February low. Let's not forget we ran up a good 400 plus points. The correction that we've seen broadly is about 50 to 60% of the rally that we saw this week. So my own sense is A, this looks like a corrective move. B, I think the silver lining in this entire down move is the fact that you can't look at some of those index heavyweights and say that this drop that we've seen over yesterday and today's intraday session has been with inclining volume. So I think that's the good bit, that the volumes are kind of average to under average in comparison to the up move. So I think that's what I'm reading, that this is probably a correction. The market could be fairly quick to even make a turn. And I think the important level, like you've been seeing even with the FNO stats, is 17,800, 17,900. This window is very, very solid support. I think let's not kind of write off things unless we breach levels of 17,800, 17,850. This belt can clearly come in and protect the market. Now, I think, yes, on the upside, 18,200 to 18,300, that's a block hole. We've seen that in January too, being respected quite a few times. So it's not like we're in a cruise control uptrend. But clearly one's got to play these levels out. And I think since we're at that lower end of the range, closer to 17,800, I would look at this as an opportunity to buy. And, given that thought process, let me start with a few buy calls of mine. Reliance Industries. Of course, we've seen the stock have a bit of a correction, but in the main, let's look at the slightly broader picture and just not the intraday scenario. 2380 to 2400 is a very strong band of support, in my opinion, for Reliance. So again, looking at where the stock is right now, if you're willing to build a position in the stock, I think it's fair to expect that this stock could actually rally significantly, maybe past 2500 levels as well in the near term. There is clear headroom that I see. And I think when an index heavyweight like this shows me that kind of clarity, that's another, help to the Nifty itself. So Reliance would be on my buy list, 2520 target. Remember, at the lower end, try and buy it on any decline. 2380 to 2400 is the band of support. Eicher Motor, another stock which catches my radar. We've seen the stock in a range of about 3050 to 3350. I am looking at a clear volume breakout on this. We've seen strong volumes on it within this consolidation. 3420 would be my target on it. Keep a stop loss of 3200. Tata Steel is another one which is attempting to stand out. I think with 110 stop loss, one could build a position for 116 next week.
Eicher Motors has recovered nearly 1.5% from the day's low. It's just about trying to break back into the green. Pull up that intraday chart, one of the recommendations coming through. Eicher Motors there for you. But the top story today, and this is a CNBC-TV18 news break which got confirmed. Minda Corp will be acquiring 15.7% stake in Pricol. My colleague Nimesh Shah had first alerted of a potential corporate development in Pricol on closing bell in D Street Chatter. And now today we've heard both sides, Minda as well as Pricol. Can you fill us in with the details, Nimesh, and the way forward as you see it?
Hi, Rima. So, as you rightly pointed out, there is an official communication from Minda Corp that they have acquired 15.7% in Pricol at an average price of 209 rupees, spending close to 400 crore rupees by investing taking 15.7% in Pricol. Now, remember, it was a reverse book building for institutional investors. So, looks like some of the large institutional investors have participated and has bid in favor of Minda Corp to acquire that 15.7%. Now, what is the road ahead? In fact, Minda has said in the press release that it's a financial investment for them, and they're expecting normal shareholder requirements for them as to what the normal shareholder gets. So that's the word from Minda. We heard Pricol saying that they are not looking to sell and they are fully committed to this company. So you need to see how things pan out from here on. But if you look at the shareholding pattern of Pricol, the promoter holding there is very low at 36%. Between funds, mutual fund owns 4%, FIs own 12%, and there is a private equity investor who owns 5.7%, which is PHI Capital. Now, even if you look at Minda's shareholding pattern, even there, this particular private equity owns close to 5%, which is PHI Capital. They own 5% in Minda Corp as well. At the Minda's level, the promoter holding is quite high at close to 65%, and mutual fund owns close to 6%. So there will be a lot of question marks asked on the Minda as well as to why they're looking to invest 400 crores for a minority stake. So what next ahead? I guess this is just a first step wherein they've shown the commitment. Now I guess they'll reach out to the Pricol promoters, and there could be further deal as well. Again, it's all realm of speculation, but as things stand, both the parties have spoken. Pricol said they are not interested to sell, whereas Minda has confirmed that they've acquired 15.7% in Pricol, spending 400 crore rupees.
Yeah, Nimesh, just confirming, Minda did say that this is, as of now, they're maintaining that this is just a financial transaction. It's a financial investment, right? That's what they're saying right now.
Correct. So that's an official announcement that this investment is a financial investment, and they should be treated as normal shareholder, and they're expecting normal shareholder rights as to what the other shareholders get as they hold now 15.7% stake.
Got that. I think you raise a very pertinent question. 400 crores financial investment. I think their own shareholders will ask if that's the best investment indeed. Thank you very much, and what a great news story break that was. In fact, let's listen in to now what the management of Pricol said. The promoters are saying they're committed to growing the business and they are not going to sell. They also claim that they have the backing of institutional investors that hold 16% stake in the company.
I was made aware of this late last night. And since then, I have spoken to a couple of our key institutional investors as well, and they are very firmly backing us as well. So if Minda has such a plan in place, I'm not aware of it, and I think we have countermeasures to take them on.
All right. So as of now, as per your disclosure, you have said that you're not a seller. What if the price is better? If it was more lucrative, would you be looking at it, or you definitely don't want to sell?
I definitely do not want to sell. I'm 1,000% committed to this business because I think have all the building blocks in place. We have all the necessary technologies in place. We have signed 3 technology agreements with leading global companies from Silicon Valley and Europe, which will further help hone our product offerings.
Vikram, you said you don't have any intention to sell, but do you see any synergies with Minda Corp? Even if you don't sell, would you work with them at any point in time?
No, they are competitors through one of their businesses, but we have taken away a lot of market share from them. And I think in terms of technology and positioning, we are on a very, very solid footing with regard to our instrument cluster business, driver information, automotive electronics business, which is the only business that they compete with us in our portfolio of businesses. So I don't see any synergy in working with them.
All right. Well, Prakash Diwan joins us as well. Prakash, what do you make of this deal? If I'm not mistaken, I think we would have spoken about this a few years ago. I recall meeting the management, Pricol management in particular, a few years ago at one of the conferences. And there was this buzz for years, actually. Both these two stocks, for the time being, they're under some pressure. How would you approach them? For the time being, the street doesn't like it. Both of them are 10% down from the day's high. Go ahead.
Good afternoon, Nigel. So you're right. I remember talking about Pricol when it was just about 1,000 crores market cap, and the anticipation was, from that level of 50, 60 rupees, it would kind of continue doing well. And there was this huge anticipation built around the company of it transiting from analog metering devices to digital, because that's the way forward, and that's exactly what's panned out. But what I think the street is probably confused with is why would Minda want to buy into Pricol's equity just as a financial investment? I mean, are the return ratios so lucrative, so interesting? And the answer to that is obviously not. Especially when you invest such a huge amount of money into another business that's almost like parallel to yours, or one of your businesses has an overlap. So I think it's at some point in time, it'll be interesting to see how the rest of the larger institutional investors behave within the Pricol shareholding setup. Because, unfortunately, the Pricol management doesn't seem to be in the mood to relent, but then they just have 36, 37%. I don't know what is the number exactly, but yeah, whereabouts of that, which is not something which is very tenable if somebody were to sell their stake and an open offer needs to get triggered. So logically, I think that's what's going to happen. Pricol has very good relationships, very deep relationships with OEMs that Minda could benefit, and there could always be an opportunity because it has a wider portfolio. So end of the day, it might end up being better, but the nature of the takeover or the process is probably a bit hostile than what you would have thought if both of them came together and sat on the table. And hopefully they will, when they see synergies emerging. So, yeah, I mean, I think it's interesting. And Nimesh has broken a very interesting story it's a developing story, as we call it, because there will be lots of developments which will be worth tracking. But the market will probably start getting sanguine about at least the idea of Minda putting money into a good, profitable business eventually, which will turn profitable because of the synergy. So I think that should correct at some point in time.
I wonder, because we had them, and I was listening again to the management commentary, right? They sounded a little angry, right? I mean, they said that there are competitors, we've taken market share from them. So I wonder whether things would have turned out differently if they'd asked nicely. I mean, the Minda, because they do.
Many times in life that is the case, right? Things turn out differently if you ask nicely.
He did seem surprised. He said, had no communication till last night. Of course, I mean, one doesn't know if some approach was made or, we don't know if the complete information has been revealed. But he did sound genuinely very surprised and a little not happy about the way this has been done. Yes.
Yeah, absolutely. Take that point completely, Prashant. By the way, also, the bulls will be very unhappy looking at the screen. We are at session lows. There's absolutely no let up in the selling pressure. Nifty is below the 17,000. Yeah, pretty much at the day's low now. That's where we are at. So whatever feeble attempt of some mild recovery, it's all getting sold into. It is that sort of a market. Prakash, just very quickly, we were discussing Aisha the other day after the numbers came out. I mean, I'm also seeing a lot of pressure on M&M as we speak. It's down 2.5%. Any thoughts on this? And just a word on the overall mood today. It's a very decisive down move with no attempt at any kind of a fight back, recovery, pullback. We haven't seen that at all today.
So, Shami, good afternoon. So, very obviously, as I said last time, after all those triggers, we've exhausted all those key triggers to the market. You just actually are now looking at overseas markets and the cues therefrom. I mean, the dollar index today, for example, has played spoilsport. The rest of the Asian markets opened with a red screen, and we've kind of followed suit. I mean, there was not much of any kind of a reversal in trend from that mood perspective. But, autos, particularly when you mention names like Ashok Leyland or Maruti, or for that matter, Eicher and M&M more relevantly in recent times, what's going to happen is there's going to be a change of ownership or new hands coming into these counters who believe that from here on you'll probably be able to do a 15-20% kind of a CAGR for the next few years and not just rely on the history. I mean, M&M has moved from 600-700 about what last year. I remember we discussed this, and it's already kind of more than doubled. And you would now have to wait for new triggers for whether it's launches, whether it's improved market share or improvement in margins coming back. So all those things are now going to be awaited. So nobody's in a hurry to commit. Whenever I talk to clients today, everybody keeps on talking about saying, okay, let's wait. I mean, it's a great story that you have, but let's wait and look at it for some time and then start buying. Nobody wants to, write checks immediately. So that's the mood of the market. Not much of volumes happening, which is also understandable because there are no triggers. But I think personally, if you ask me, this is where the smart money is going to keep on accumulating value stocks. There's lots that's available on capital goods. There's lots that's available in the BFSI space, the IT space. So all of that will continue to happen. And after some time, you'll probably see a bit of momentum. What triggers it? I don't know. We don't know yet. But I think it's time to look at a little bit of value picking at this point in time in the markets.
And the mood of the market is punish the banks. The banks have been underperforming. Today, the Nifty Bank is down 1.5% this week as well. You've seen the Nifty Bank underperform the benchmark indices, and PSU banks are taking it on the chin. PSU banks, they were the darlings of the market towards the end of last year, but now down 2% today. This month, they're down 5%, and year to date, they're down 12%. Get into a break. On the other side, we'll continue our conversation with Prakash. We'll talk cement. We'll also invite our Alpha manager for the day. Stay tuned.
Welcome back. Well, those bounces are getting sold into yet again. Hindalco's moved to the low point of the day. Mahindra & Mahindra is under some pressure, and TCS as well has moved a little bit lower. But one space which is seeing a lot of traction today is the cement space, and it's clearly bifurcated because some stocks have come off the high point of the day, case in point being in India Cements. That's now moved into the red. While you have the other segment of stocks, whether it's the Ramco Cement, Ultratech Cement, they are holding well in the green. Even JK Cement is holding quite well. Three broad factors playing out here. One is company specific. You have Ultratech Cement that's expanded capacity in Chhattisgarh as well as in Odisha and takes their capacity to around 127 million tons. So good on them. Next up is Sagar Cement. Well, they have acquired Andhra Cement, and the acquisition was done earlier, but now the details have come through on the BSE. So the capacity out there is around 2.6 million tons of Andhra Cement, which is an integrated unit. That means they have clinker out there. But they've clarified that the plant is shut down as of now. But Sagar Cement says that by the first quarter of next fiscal, they're looking at getting this plant up and running. Why is this lucrative? Because it takes them above the 10 million ton odd mark. And also it's acquired at around $56 per ton. So good on them as well. Next up, moving to the cement pricing. Remember, pricing has been a bit of a dampener. For the first time in many years, actually, I've seen that in January, you don't have a price increase that has come through. But, a couple of brokerages like DAM Capital, they're saying that prices increases have been affected, whether it's north, west, or even south. But in South India, they're saying most of it is not being, accepted. So out of the 20 rupees per ton, per bag, close to around 10 rupees has been accepted as of now. The good news is that they're trying to push through another price increase. So let's see whether or not that goes through. Remember, input costs have been going up. So that's why they're pushing through price increases. InCred, they've done a quick analysis. They're saying that realizations are still flattish on a sequential basis. That's Q4 versus Q3. But they believe that EBITDA per ton will improve in Q4. And they've highlighted that in Q3 versus Q2, it improved by around 180 rupees per ton. The final factor is GST. Yes, there is hope there's going to be a GST cut because the FM has said so that they're going to consider it from 28% to 18%. But as of what we understand, that at least as of tomorrow, it's not on the agenda. So those that are speculating that it's on the agenda, that's not the case. Prakash is still with us. Prakash, what do you make of this? Some of these large names like an Ultratech Cement, Ramco, the leaders in their pack, they're doing well today. How would you approach this, or are you going with the erstwhile favorite, Dalmia Bharat?
No, so Nigel, I think now it's started making sense to get into a little bit of a basket approach on the cement side. I think given the kind of capacity addition that some of these larger players are doing, and surprisingly, the M&A is happening in the mid-size space. The way you saw Sagar and Andhra getting into this whole arrangement. I mean, it's big is getting bigger and size is going to get very critical. And that's precisely why a Shree Cement or an Ambuja or a Ultratech would definitely have a march ahead of the others. So I think if somebody were to make some fresh allocation, it's a great space to be in, no doubt. But you'd have to have at least an 18 to 24 month horizon to really reap some significant benefits here on. And my pick would probably be now looking at the price correction in Ambuja. I think at some point in time, everything is set for them to be able to scale up the cost advantages that they've been able to demonstrate even in a short period after the new promoters have come in. It speaks a lot about what's possible, right? So we spoke about it, whether 380 was a good price at what the promoters bought. Today it's at 350, which was what the reference price I was talking about. And that's the space to kind of be into, the big space, the big players. Allocate your money across maybe a Shree and Ultratech and Ambuja if you're not very sure of one of them. But definitely the big ones are what you should have on your portfolio.
Mm-hmm. One of the big movers in the mid-cap space today is Shilpa Medicare. It's up nearly 12%. So the company's Bengaluru facility has now been registered with the Ministry of Health in UAE. And this facility will be used for manufacturing oro-dispersible films. Oro-dispersible films are basically small films which are medicines which you will put on your tongue. And they will automatically dissolve. So instead of taking a tablet which you need to ingest with water, which is tough for, say, babies or tough for old people, you just have this very thin film which is injected with medicine. You put it on your tongue and then it gets dissolved. And that's another way of injecting and ingesting your medicine. So that's oro-dispersible films. And Shilpa Medicare's facility in Bangalore has now been registered with UAE, so the company will be able to register products in UAE for commercialization. The stock clearly is very excited, came out with numbers a couple of days back. Prakash, do you look at Shilpa Medicare? It's one of those smaller pharma names, but interesting development there.
Oh, absolutely. So, what's interesting, Rima, as you rightly pointed out, is the kind of innovation that some of these smaller pharma companies have been responsible for. And that's kind of kept them ahead in the game. That kind of makes them relevant even in a very competitive global environment. And I see this happening across the board in so many companies. I mean, there's a small company out of Ahmedabad that I met some time back. They were into formulations, but now are getting into oncology in a big way. So it's so interesting that some of these smaller companies are reinventing themselves within niche plays, which are going to be extremely profitable, if not very clearly top line driven. So, but the margin profile, the kind of niche that they cater to, are significant. So, Shilpa is of course one of the good ones, and I wouldn't be surprised if you have more of such names coming to the list, coming to the fore in terms of your salient pharma names, aside from all the biggies that we keep on talking about.
Okay. All right. Prakash, thanks very much. Good speaking with you, and it's a pleasure having you with us here. Thanks indeed.
Thank you.
Now, our alpha manager of the day is Mukundan Siva, is the managing director at India Avenue Investment Management. It's a fund. It's a FPI, which has basically investors out of Australia, and it allocates money here in Indian stocks, and it takes investment decisions based on sort of recommendations from 3 investment managers in India. Mukundan is with us here. Mukundan, good to have you with us here. Thanks very much. So, you know, just in terms of how you are seeing things, I mean, just give us an overall perspective of whether, first of all, is more money coming into the fund? Is it an open-ended fund? Is more money coming in, or is this the best you've seen?
It's open-ended, definitely. And, I think for a foreign fund, probably some of the issues that we face are very different to what might be faced locally. It's a competition of capital. So is money going to China today? And is that why it's being deviated from India? Valuations are always a key question that foreign investors ask about. So I think the key aspects for us when we're marketing and positioning it is really why India in a portfolio? What are the particular aspects that would attract an investor to taking an allocation? How much? Where?
People still ask that? Why India?
Absolutely, absolutely. I spend a lot of my time educating.
Okay.
And it's only once that education is finished do we get to what's in the portfolio.
Okay, so let's come to that next part. What is the India story that you're selling out there to your Australian clients?
So essentially that India is not going to be the next China in the sense, because they want to copy a blueprint that is not going to be replicated the same way. The growth story will be the same, but we're essentially selling diversification and growth. So when you look at Australia, it's a commodity-driven economy where it benefits from commodity price rises. India is very much different. Large population, small population. The two currencies behave polar opposites. So essentially, it's not just a story of saying, hey, we want to buy the highest returning investment. It's also the diversity it brings to the overall.
No, but diversity can be had by buying US stocks or any other stocks. What is it about, and that will tell us about your view on where the market is at right now as well.
Yeah, so I think, yes, there is diversity by buying other geographies, but when you actually put the numbers on paper, India has a very low correlation to Australia. And that's because of that anti-commodity play. But essentially, we are selling the growth aspect of India, compounding returns, less cyclicality, high ROE, all the aspects that stand it aside from some of the other markets that people typically allocate money. An Australian would typically have 30% in a local market, 25% in US equities, and then a smattering of other markets.
Valuation is a key factor, right? When someone has to decide where to allocate money. And here you're competing with all the other emerging markets. How are you assessing demand for India? Has it waned in the last couple of months as valuations got a bit too premium and pricey versus others?
Yeah, in the last 12 months, definitely. Predominantly because India didn't really underperform in 2022 relative to most of the other markets. And therefore, valuations stood up high. And it's explaining to people that local investors have become a much greater piece of the pie, which they can't comprehend because in the past it's always foreign investors in and out, and you think of volatility of the market and currency that way. So I think for us, it's trying to get around this valuation argument.
So you're willing to invest in India despite the high valuations?
Well, our fund is India only, so we don't really have a choice in that, but we are talking 5-year themes.
So let me ask you this question in a slightly different way. The Indian market is valued, highly valued, we know that. And you also said that you are selling India on the basis of the growth promise.
Yeah.
So which sectors? I mean, are you selling the consumer story? Are you selling banks? What is it you're convinced on the most? And then, what's the pitch?
Well, I think in the last 10 years, it's a different pitch to what it is going forward. So today, the focus is very much towards businesses that can benefit from the scale that they enjoy in India, but can also build a global presence and perhaps take place in the global supply chain. I don't think the rest of the world is going to run back to China and say, okay, now that everything is functioning again, let's start off where we left from.
Can you give us some examples? I mean, I don't know if you are allowed to, but if you have public disclosures,
sure.
Some idea or some hints of the kind of companies. You mentioned high ROE, you mentioned growth.
Yeah.
So, and then you also mentioned diversified Indian MNCs, so to speak. I mean, Indian companies that can go global.
Yeah.
So some more hints on the kind of companies you look at?
Yeah, so we are overweight on the pharma sector. And the view there is, like Indian IT of 20 years ago, there could be an opportunity for Indian pharma going forward, particularly when some of the patents are rolling off in the US. Some of their counterparts overseas are in weaker shape than what they were. India has the capacity to be able to roll out scale and is already an expert in the generic space and a global leader. So I think there will be industries that evolve that perhaps didn't evolve so much in the last decade, and we put more of our focus there than perhaps pure local demand stories.
All right, Murugan, it's a pleasure. Great to have you with us here, and good speaking with you as always. Good luck.
Yeah, thank you very much.
Thank you.
All right, what we'll do is we'll take a quick commercial break here with the market, which is down 100 odd points or so. 17,936 is where we are at. Market breadth, by the way, is 1:1, not too bad. But it's all about individual stocks, which is what we'll focus on when we return. We'll get you a quick check on what's happening in dealing rooms with Nimish on D Street Chatter. And of course, we'll get you a buy today, sell tomorrow, quick turnaround calls with our technical experts. Stay tuned, all of that coming up.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, we've got a bit of a bounce, so maybe some cheer towards the end of Friday. Well, we're still down close to around 100 points out, but Bharti, that's done a bit of a fight back in the last few minutes. You have Reliance Industries that's fighting for the bulls, and for whatever it's worth, even Adani Ports, as we speak, has moved to the high point of the day. But it's a down day nonetheless. But let's hop across to Nimish. Nimish, what are you making of today's trading action? What's the buzz?
Well, you're back to square one, right? I mean, we started on a good note this week. Small incremental steps to go above 1800, and one day, just one evening, and we are back to what it was. So pretty much flat for the week. Bank Nifty is down more than 1% for the week. And even in today's trade, the overall feedback is that there is not much participation from the larger institutions. In fact, for the whole of this week, we've seen incrementally small sort of buying interest from the larger FIs. If you exclude the block deal data, still they were net buyers. So the aggressive selling from the FIs has stopped. That's a good sign as far as India is concerned. I guess today is more about global risk off, which is playing on in Indian markets as well. But broadly, as I said, it's week of consolidation again, pretty much flat with a bit of negative bias towards the financials, because that's the one index which is dragging the markets down. The good part is there is a bit of leadership back. Reliance took the leadership for some days. ITC was there for a few days, and a bit of leadership in IT as well. So that's playing good for bulls. But I guess the banks is what is spoiling the party for the bulls, at least for this week.
Yeah, that's the sore point. The Nifty Bank, that's the sore point all of the week. The IT index, they took some part of the load. Reliance played a bit of a cameo, and even ITCA. But tell us, what are the stocks you're tracking?
Sure. So in terms of individual names, the first stock on my list today is Prince Pipes. There is a large block, more than 1% equity changing hands. And I believe one of the domestic mutual fund or a PMS fund was a buyer in today's block. What will be more interesting is if there is a disclosure of whether if one of the promoter entities sold in today's block. So that will be very interesting to watch out for as far as Prince Pipe is concerned. Second stock is Surya Roshni. That's been a big mover in this week. Even in today's set, up 6% last when I checked. And there is a lot of interest back in that particular stock from larger HNI. So it's largely on back of HNI flows that this stock has been a big outperformer this week and in today's trade. And the last one is Shobha. We spoke about block deals in a lot of companies. Now I believe there is an anticipation of a large block in Shobha as well, and that's the reason why that stock has been consolidating in a very narrow range. and there is an expectation of a large block coming soon in Shobha as well.
Okay, got that. Thanks very much, Nimesh, for the updates there. By the way, those are really important observations coming in from the Supreme Court. Our colleague Ashmit is telling us the latest. The court has observed, and I'm quoting from the statements that are coming in, that we must not accept a sealed cover suggestion from the government. Remember, the government's entire stance was that they are okay to share information and give more details to the apex court, but it should be in a sealed cover, in a sealed envelope. And the government's entire sort of argument was that they don't want to unnecessarily rattle the markets. It's very sensitive information, confidential information. So they're okay to share it in a sealed cover. The SC doesn't seem to be in agreement with that. They're saying we will appoint a committee of our own, which will instill confidence. Otherwise it may give the impression that it is a government-appointed committee that has been accepted by the Supreme Court. So I guess this is interesting, Prashant, and what it tells us that this saga is nowhere close to coming to any kind of a decisive conclusion, right?
Looks like it, Surabhi, and I think we'll have Ashmit join us for more, just to kind of put things in context. But as you said, nowhere close to the finish line. I mean, actually, it's got to the courts only recently, so I think it'll take its own time. But of course, markets don't wait, right? Markets have moved in super fast speed, big correction, a little bit of a bounce, and of course now stocks are where they are, far off, of course, from before the time that the Hindenburg report actually was released. All right, the market is itself picking up a little bit of steam. We are down just 88 points. So this should be at least the last high for the last 45 minutes or so. Rahul Mohinder is with us to tell us what to buy or sell today for a reverse trade tomorrow. Rahul, good to have you with us, back with us. Tell us what is on your list.
Well, cement cannot be ignored, and I think Ultratech definitely comes to the front there. I think I was looking at the volumes, probably one of the highest single-day volumes we've seen in a couple of months now. So I'm going to be looking at some follow-through there. One could buy at the current levels, somewhere between 72.90 to 7,300. We should head to about 7,430 as a target. I'd keep a stop loss of 72.20 when going long on Ultratech. ICICI Bank is another one which I'd look at buying, clearly because it's bouncing off clean support levels, and one could look at targets for about 881, 882 come in. I would keep a stop loss of 852 while buying it. Agreed, banking's had a bit of a tough run now, but I think this is one stock which is at a good support, and potentially if even a little bit of a bounce comes, I think it could follow through fairly well.
Okay, got that, Rahul. Let's just look at the market. What's actually helped the market's case in the last 20 odd minutes is actually Reliance. Reliance has managed to move up about 0.5% from being absolutely flat, and that explains that little tiny bit of a bounce from the lowest point of the day. So that's Reliance for you. Very range bound today, very range bound through the last 1 year actually. Deepan, hi, good afternoon. Surabhi here. Just want to get your take on Reliance. Of course, we had the windfall tax cut news come in yesterday, but even beyond that, so many triggers with all parts of the businesses, yet the stock has been stuck in a range. Would you be a buyer at current levels?
Yeah, good afternoon, Surabhi, and thank you for having me on your show. I think so, and I think we were quite pleased with the numbers which came from Reliance for the December quarter and the earlier quarters as well. I think it's following through well on its strategy across all the divisions or so. There are some concerns which have come as regards increase in debt and again some compression of the return ratios. But for me, the key trigger for Reliance has to be the value unlocking opportunity or the kind of plan which the management has in mind. Because if they're going to be straight IPOs of the subsidiary companies, then Reliance becomes a holding company and discounts come into play over there. But if it's going to be split and free shares offered to the minority shareholders, that will be a great value unlocking opportunity. The scene just now is that if I want to buy any specific Reliance group company, like say Reliance Retail or Reliance Jio, then I have to buy the entire conglomerate and I cannot get exposure to a specific business. And these businesses now have different variables and different growth momentum as well. So I think that's coming in the way of, at least from an institutional and a retail perspective, it's coming in the way in terms of maybe putting more money to work in Reliance Industries.
All right. Hi, Dipan. Good afternoon. Almost into the weekend, but let's focus on a couple of stocks then. L&T, that one is holding strong with a gain of around 2%, while the Nifty is lower. Now, Indian markets could have its up and downs, but India is on the path of growth. Would L&T be the best proxy out there? And at these prices, would you look to buy in?
Good afternoon, Nigel. Absolutely. I think I have said it time and again, and plus the disclosure that we and our clients are invested. I think L&T is like a must-own stock, part of your core holding. We are seeing a fabulous uptake in the capex cycle. This budget itself, 37% higher spending on capital expenditure on infrastructure projects, and that's certainly going to benefit L&T. Management has been extremely proactive in terms of improving the return ratios, picking and choosing the right projects so that their operating profit margins can move up. Great value being created in subsidiaries as well. I don't know whether it's unlocked or not. But nonetheless, I think the company and the stock is on a roll, and the best years are ahead of L&T. Don't get too much into the valuation. I know it's on the higher side, but the earnings going forward will certainly surprise, especially the March quarter earnings.
All right, Devan, stay with us. Just coming back. By the way, as we always do, we get you a quick preview of what's lined up on the Editors Roundtable, which comes up at 4:30. So just to tell you what's lined up, we get you the focus actually in a large way is, of course, the big story which we broke, which is, of course, the Minda Corp Pricol story. The various facets of it, we'll kind of dive deep into it. Nimesh will take us through how all of that is set up. This is, of course, turning out to be a hostile battle, which perhaps will play out. We'll also put into perspective the earnings picture. We'll tell you which companies have seen the biggest downgrades, which companies have seen the biggest upgrades to their earnings expectations. I'll put that piece out. Nigel will tell us, what the aggregate earnings picture for the Nifty 50 and other larger indices are looking like. And, from downgrades to upgrades, the spotlight will be on the auto sector as well, which has seen a comeback, and Sonia will get us that. So that's basically the picture which we will focus on at 4:30 on the Editors Roundtable. Take a very quick break here. We are back in just a bit for the last 7 minutes of trade.
Welcome back. Tech Mahindra is flat today, but this week it's gained 11% and is the top Nifty gainer for the week. Well, Tech Mahindra fundamentally has been underperforming in spares, both on revenues and margins. And this has been happening for a very long time. But now it's worrying the promoters of Tech Mahindra, that is the Mahindra Group. So M&M, in its earnings call, which took place last week, and here I'm, paraphrasing a lot from the Kotak Institutional Equities report, which was released earlier in the morning, and they're saying that the M&M management has now taken note of Tech Mahindra's underperformance on both revenues and on margins, and they want this to be corrected. And they're saying that the company is going to take steps, but only post the new management comes in. Remember, the CEO, C.P. Gurnani, steps down in December, but before that, we will hear of the new CEO, and then the Mahindra Group will action out their plan that how they expect the company to get back on the growth path versus peers. So they will no longer underperform. So the fact that the promoters now have little tolerance for the Tech Mahindra's underperformance has got the investors excited, and that's what Kotak Institutional Equities has said. Dipan, any thoughts on Tech Mahindra? Should one bet on Tech Mahindra? Do you think it will be able to reverse its underperformance? And are we hoping too much from the new CEO, whoever he or she is?
See, I think Vima, new CEOs have sometimes worked out very well for companies. We saw what happened with Infosys and earlier with Wipro as well. So something similar could play out in Tech Mahindra. I think if the new CEO is an outside, expert, then certainly can shake up the organization, focus more on marketing and chasing larger deals. Because Tech Mahindra is in a very interesting space, telecom. And because of the kind of expense taking place on the 5G side globally, one would have thought that Tech Mahindra could be an outperformer when it comes to growth rates, but that's not been the case. So I'm hopeful. Stocks are definitely at attractive valuations. And maybe I think if a new CEO comes into play and he's able to rev up the organization on the sales side and they go back to industry growth rates, then you could see a PE re-rating as well. So I would want to sell Tech Mahindra at these levels. I think let's just wait and watch and see how the new leadership emerges.
All right, Divan, we'll leave it there. a quick conversation today. Appreciate you joining in. Have a good weekend, and we'll see you back next week. Thanks indeed for taking out the time. 2 minutes to go for close. Let's quickly wrap this up. 90 points lower is what the Nifty is going to end today, which is not even 0.5%. For the week, we will end 0.5% higher. So down 90 on the day, up 90 for the week. That's the picture. Let's just look at the bank Nifty as well, which has a slightly deeper cut, 1.25% on the bank Nifty today. So that's what, almost 500 points. For the week, it's down just 1%. So I think today things accelerated on the downside. Bank Nifty all through this week has underperformed what the Nifty has done. No question about it. Mid-cap index is down about 0.8%, and I think you got the small-cap index, which is down 0.75% as well by close. Rima.
Well, Adani Group stocks. So Adani Enterprises ends with a cut of 4.5%, but Adani Ports in the front line manages to eke out some gains. There was a rally in the last 1 hour of trade. Nestle reverses all of yesterday's gains and closes lower for the week. Nestle down 3.5%. SBI Life and HDFC Life, these two insurance companies come in for selling pressure, down 2%. In the banking pack, and banks were the underperformers. You've got IndusInd Bank, State Bank of India weak, IT names, HCL Tech, TCS correcting in trade. On the gaining side, L&T was the top Nifty gainer, rallying 2%. Ultratech Cement hits a fresh 52-week high, and you had strength on BPCL, ONGC, and Reliance Industries tried to pick up towards the end, but this week, Reliance Industries has seen a 4.5% rally, so that one was a big contributor. There goes the bell.
That's the bell. Just very quickly, some of the mid-cap highlights from today's action. Obviously, we've been talking about Pricol and Minda. Let's tell you how those stocks have closed down. Both down about 4.5%. Then you had Schaeffler India, which was a good result reaction, 4.5% up on Schaeffler. Actually, some interesting movers on the upside. Look at SpiceJet. Yesterday, the stock was up 8%. Today, again, it's up about 4%. That's something you can't really ignore. Shilpa Medicare, Elecon Engineering, some of the smaller names are doing okay. And then a clutch of Adani stocks, Adani Transmission, Total Gas. These are the ones, remember, where the MSCI changes have been pushed back. They were again down 5%, limit down today. That's the way it has played out. But otherwise, we are ending with a cut of 91 points on the Nifty, over 1% down on the Bank Nifty, and mid-caps also sulking as we get into the weekend.
By the way, I'm told, I think the FTSE semi-annual rebalance decision will be announced at 4 p.m. today. So that's something that we should be tracking very closely. But with that, it's a wrap and closing bell from the entire team. Thank you for watching. Enjoy your weekend. But before that, stay with CNBC TV 18 because our Friday very special Smart Money comes up next.